Man, look at all the people we got in here today. That's cool. It's already one of our most well-attended sessions then. Let me make sure we're recording this because the last time it didn't get recorded, or one of the last times. It's like everything's up and running. Yeah, I haven't shared my screen yet. I'll go ahead and share probably the first screen that we'll be talking about. And you guys have the capability of unmiking, so when we get to anytime there's questions throughout this, because I don't have a like an agenda per se. There's some things I want to touch on and cover. There's been a lot of questions just over the last couple weeks specifically, just about some of the tools that we're using for taking trades, tracking trades, just tracking price. And so I wanted to go over, those things specifically, but again, I don't have much of an agenda. There's not like a lesson that I'm, formally teaching on today. So if there's any questions throughout any of this, just, you can drop something in the chat real fast and I can pause and answer the question, or you guys have the ability to unmic if you got mics. So feel free to do that. If anybody is unmiked and I hear like background noise or something, just, I might mute them. And so if you do have a question again, it might be the easiest to drop something in the chat and let me know you got a question, and then I can unmute you just to avoid background noise during the session. And I see Stubby or Deltajeans is on here too. Feel free to chime in when we're talking about Gamma Edge stuff, because I know you have also spent a lot of time working on Gamma Edge. And so I would draw on you for some of that if you have something that either is in addition to what I'm talking about, or if even if you hear me saying something that maybe is a little bit inaccurate, because I'm still working through the Gamma Edge stuff. And, a lot of what I do with the Gamma Edge is just me interpreting the commands and charts that I'm pulling. They don't, at least maybe they do, but I haven't found it. They don't fully tell you, 100% how to use every single chart. It's just you're pulling these data, and sometimes it's up to us to be able to interpret it correctly. Yeah, Void, thanks. Type questions in the chat if you got them. So the first thing I'm gonna kind of go over is Gamma Edge. We post all of the Gamma Edge. Well, not all of it, but all the tickers that I track. Right, we have a pretty good amount of tickers that we do. It's most of the major tickers that we trade: Apple, AMD, Nvidia, Tesla, QQQ, SPY, right, Meta, all those. We post those every single day, or at least try to every single day, if not updating it throughout the day as well, in the Gamma Edge section of the Discord. So the first thing we're going to do is just do a little brief overview of the chart itself. Just for those of you again who maybe are curious or don't quite understand, everything we're seeing here. I'm going to try to break it down for you. So we have, shared on the screen. I just have Tesla pulled up just for an example, right? But it can be any ticker there. What we want to look at is on these charts, right? We have all of our options data, right, over in these boxes here. On the middle column, we have our net gamma, our total OI. We have our what is that? Out of the money puts and out of the money calls, right? I don't remember what C stands for, but this is basically where like the area where the out of the money calls go into the money, the most out of the money calls go into the money, or the most out of the money puts go into the money. It also tells us what our expected move is, our expected top and bottom, current spot price, whether we're put or call dominated for that strike or whatever strikes, or sorry, that expiration or whatever expirations we have selected over in the expiration date filter, right? It tells us some other information, where our supply and demand levels are, net gamma, last spot price, some Greek, when the last Greek's update was, right? So just gives us some more information here. And then over on this side, it allows us to change our expiration, so we can filter or we can select all, and that will show us all expirations that are available on the market right now. So we'll just select one. We'll select the one we're going into this week. And what we can see again is we have all of our options information over here. So we can see with the green dot here, this is the highest level of call open interest, okay, up at the 400 level. We can also see that the highest put open interest is all the way down here at 230. Okay, this white box is our transition zone, or easier understood is that there's going to most likely be the most amount of chop when we're inside of this transition zone. And then you can see, if you kind of look at like where the out of the money calls and the out of money puts are over here in that middle column, you can see at 354 and 385. So if you look at that transition zone, it's pretty much just right outside of both the boundaries of those transition zones, right? And so what we can expect chop in here, and then if we get outside of these boundaries, we could potentially expect expansion to go in either direction outside of the transition zone. And that transition zone can increase, decrease, just as flow comes through and as the numbers are changing themselves. So that's not, it's not always going to be static and always be the same throughout the week. It just depends on where we're seeing different contracts be bought up, whether that transition zone changes or not. You're going to see a lot more fluctuation on like the indexes that have 0-day expiration versus like the weekly. You might see this transition zone contract and get much smaller near the end of the week, just because for that expiration specifically, we'll have more and more kind of flow coming through near spot price, which is going to be just kind of people betting going into the last day of the week or 2 days into the week on where price is currently at for spot. And so we're gonna on something like Tesla that has high volatility, we're probably going to see more of that transition zone on like a Monday or Tuesday for the week, and then as we settle in kind of to a range for that week, we often can see that transition zone shrink sometimes, also depending on what kind of data that you have potentially coming out near the end of the week. So Sirius Rose has a question real quick. Can you please go over the bars? For example, does it mean that there's a lot of puts on the 350 level? So yeah, so OpenI doesn't necessarily, OI doesn't necessarily mean, that's where orders, kind of sit. I don't know that that's where orders have been actually purchased yet. It's just, I think, where different orders sit, or where there's, again, interest in that specific contract. If we look at the bars, we'll go into Delta and we can go into Gamma, which is mostly what I use here, and I think is the most important, because I've seen big open interest position or big open interest levels that don't get hit. It just we never got to those prices. So I don't really pay attention that much to open interest unless we start getting to the point where we're close to that level, and then it could be important that if we hit that, like say in this count here on 400, if we get up to 400, those are probably 400 calls that want to drive price higher. And so, if we start to get close to there, then it's important. But you can also see here right below it, there's, some open interest that's close to the same value as the 400 level up in this 385, which is also right where our out of the money calls start to go in the money. And so, you could also think that maybe price drives here when we get there.
Hey,
Yeah.
Rustik, I just wanted to. So what I usually use is the net OI column, just
Okay.
because. So the 350 level, for example, there's 10,000, negative 10,000 right there. And I think I was just trying to help explain a little bit more on the 357.50 once we get into that negative transition zone. So you'll have, like, how I line it up is I'll just usually look at net OI and look at what is the transition zone outside of the box. So you got 380 and then you got 357.50. The 380 would be our positive transition, and then our 357.50 would be negative transition. And then we can see that at the 350 zone, there's a significant amount of change from negative 427 to 10,000. So we could see some sort of profit taking right there. We see that obviously there's a significant amount of puts on that level than calls. So what I would just from there I would speculate, okay, once we get to that level, we could easily suggest, okay, that's a order block of some sort. There would be at that level there'd be a whole bunch of orders transacting, people either profit taking, or we might struggle to break beyond further. We might struggle to go even lower. Um, so from what I was told is the market makers themselves will try to offer liquidity or try to push the price to a liquidity zone, and then those those key strikes right there, like 350 and then 400, are the most significant strikes to pay attention to for a probable reversal. That's how I was using it. And then you want it like see a transition. So from 380, we could see a smooth transition. But once we get to, like, for example, 382.50 to 385 to 387.50, there's a transition of 200s to 9,000. That's a ledge right there that we would struggle to get above unless buyers take over. We might see what is it called? A we need some sort of catalyst or some sort of news event or some significant buying pressure to get above that 385 to 387. I've seen historically where I've back tested it where anytime that we go from 200s or 100s level to 9,000, we'll struggle to be pushing beyond that. And that's the reason why I pay attention to net OI.
Perfect. Yeah, thank you for that explanation. That I think is valuable and makes some sense. And then you want to obviously use all of these things in kind of congruence with each other, or they're all telling their own part of the story, right? So Delta just kind of told us a little bit about how he's using OI on this chart as one piece of data. But then when we start to look at Delta, right, Delta is going to give us a little bit more of the story, right? And like on this chart here, we got a lot of negative Delta. We have a significant amount of negative Delta, right? That's going to end up being a wall down here at 350, right? And we also have very little gamma in between here. So you can see with all this negative, right, our current spot price is this, gold bar here. And so you can see as if we try to push up, we have this negative Delta that's dealers hedged short, right? Every time we push up into these levels, unless we start to see them pop positive, the narrative here is that we're going to continue to have the dealers try to drive price down, right? All the way to potentially down to this 350 level. That's going to present a wall, right? Now, also with the gamma, the other thing we look at is gamma. And there's no significant levels except for this 15,000 here, right? These are small levels in comparison. And gamma is going to kind of be the multiplier, if you will, for Delta. So if you don't have high gamma levels at every strike, you're not going to see dealers continue to be motivated to push price through those different levels. So let's say, for instance, we're starting to fall to 350, right? Delta is pushing us down because the dealers are short. We get to the gamma level here, negative 15,000, but our next lower gamma level is only 1,500, right? So when you start to experience the gamma curve as we push down to that 350 level, dealers can actually, they start trimming their positions and closing those out because there's no gamma to continue to increase delta as we fall. So they don't continue to hedge short going down below these strikes below 350 unless you start to see those delta levels and those gamma levels increase.
Yeah, Rustik, I just wanted to piggyback off of what you said. Like just how you said they'll pretty much hedge their position at the 350 level. I kind of just flow into where if they're hedging their position, I would expect a possibility where buyers will step in. Like once you're taking negative deltas off the table, you present the opportunity for positive deltas to be added, and especially like a significant level like that. I mean, you could make a trade off that level, but then again, it's like you just it all depends on how we react to that level.
Right. Yeah. And because it's negative delta on a put like that, I wouldn't instantly like buy that bounce until I saw some kind of confirmation because, currently as we sit, dealers are short on that position as well. Right. But it could have just been out, because it's out of the money, but they certainly could be, that certainly could be a catalyst when you got to 350 because it's not positive delta that they try to drive price like aggressively through that 350 level. So, just because a level's there doesn't always mean take it the second it hits, right? We definitely want to use those as kind of our parameters of like, okay, I'm really going to be watching that 350 level, or I'm really going to be watching that 385 level, up above. And when we get there, I'm going to be, kind of just seeing how price reacts to it. I don't think we ever want to just blindly take something just because we're at a level, without some kind of confirmation, or at least if you are going to take those trades the second we get there, have clear boundaries with yourself of where and how you're going to let that go if it goes against you. Because again, they're just levels. They're just kind of an idea of what we're targeting or where we think price is going to go. And then we're going to, kind of watch for other things in order to figure out what our best entries can be. So that's kind of this, this chart. This is the Gamma Edge, app, right? This is probably one of my most favorite parts about Gamma Edge, but it's not the be all end all. It just gives you a lot of information. And so it's really nice. The next thing I'm going to do is I'm going to show you guys, the Gamma Edge server, which I know, Deltajeans uses a lot. I've started using it more. I know Fatazi also uses it. And so it has a lot of awesome commands, especially if you're trading, QQQ and SPY on 0 day. Has a lot of value there. I have found that, some of the commands on like weekly charts, they just change, they change over the day. And so it's not always as valuable, but it still is good. I just found that it's really useful on the 0 day. And I've seen Deltajeans have great success using this as we've all seen him, take that $1,000 port over 20,000. And I'd say, from what I've witnessed, a lot of it's coming from using those tools just to kind of develop a narrative in order to place the trade, and then he's managing the trade really effectively. So let me see if I can share with you guys the Discord itself. All right, so I'm gonna pop. Go ahead.
Check the question.
Oh, okay. All right, I gotta stop sharing the screen because I have like the infinite shrinking thing going on. All right. Yeah, I mean, you can definitely, Aquazar, you can definitely like try to grab the level the second we hit it and try to get a scalp before we see if it drops through a level or not. It's just That's up to you. Again, I just say have very clear parameters that if you're going to try to play the level the second we get to a level, like where you are you going to run a stop, you know, because what if they blow through the level? You know, I would prefer to, you know, watch like the 1 or 3 minute chart, or maybe even just a 5-minute chart. And when we get to a level, if we think it's going to reverse off a level, wait for that like fair value gap, wait for that inverted fair value gap, you know, wait for that, you know, shift of structure and then return to an order block, you know, some of the smart money concept stuff we're talking about, or that I've taught a lot about. Or if you're using the DVTrendz indicator, right? Wait for price to pop over the 3-minute trigger or pop over the 5-minute trigger on a reversal. You know, and you can take that as well.
Yeah, how I use it is I pretty much use exactly the way Rustic explained it. I would use one of those once we get to one of those levels, I'll look for a significant PD array, which is just one of those ICT concepts that Rustic's talking about. So like, um, you'll see three candle pattern, and you have to be able to identify what an order block is, or you'll see a fair value gap, or you'll see a change in state of delivery, and then those are all things that you can you know, look at in terms of ICT concepts and applying those at those levels to see a potential reversal.
Absolutely. And if you're watching SPY and QQQ, you can also look for the SMT, where one sets a lower low, one sets a higher low, and then grab the one that looks like it's stronger. So, you know, if say price is fading on QQQ and we're coming down to a level that we're watching for, you know, as far as our gamma or our delta levels, we get down to that level, you know, SPY sets a lower low, Q set a higher low, compared to, you know, SPY. That's called the SMT. At that point in time, we would be wanting to trade Qs instead of SPY, because it's showing that it has the strength compared to SPY. So another one of the smart money concepts that you can use. You know, ICT teaches it on like ES and NQ, but the same applies on QQQ and SPY. Also Sirius, Rose, I don't think I finished answering your question. So a lot of information on those charts. What are the 3 or 4 main things to look at, especially for beginners? Yeah. Delta, gamma, right? And those are the 2 main ones really on this chart, right? Deltajeans says net OI as well. You know, that's up to you. I'd say I always, or I mean, I'm at least going to say if you're starting to learn to understand, yeah, there's nothing on the screen right this second. If you're starting to just understand and learn options, Greeks, right? You want to get proficient with Delta. Delta is king, right? And then gamma is going to be kind of the next thing you want to tackle. Once you feel like you have a good handle on Delta and gamma, I'd say you can start looking at, you know, understanding charm, and those things. But Delta and gamma, I think, are what I would focus on if you don't feel like you have much understanding of options Greeks in the first place, because Delta is going to be the rate at which the contract increases or decreases up to a total of +1 or -1 as a maximum, right? Most of our contracts when we're entering that are near the money are like a point between 0.4 and 0.5 Delta typically. As price rapidly increases, Delta increases, which causes those contracts to go up significantly, which is why you see like when we enter a QQQ or a Tesla trade or something and price like pops quick and you see like the premium run up, and then, you know, the strength of that run starts to fade, even though the price didn't come back all the way to where we entered. Sometimes those contracts can end up being less, like worth less very quickly, because that delta is not increasing rapidly when we stop that impulsive, like that impulsive price move. So, you know, a lot of times with those QQQ and SPY trades, you just want to, you know, scalp that aggressive move and get out, and then wait for some kind of move back down or back up, depending on which direction we're going, and then jump into it again, because those impulsive, like rapidly increasing moves are the ones where Delta just shoots up and causes the premium to increase very quickly, and you can make a lot more money just grabbing those scalps than you do sitting around and waiting maybe for a target to hit. You could enter those sometimes 2 or 3 times, you know, and get multiple good scalps out of one entire move instead of just sitting around waiting for it to actually play out. All right, let me go ahead and share my screen again. So this is going to be, I'm going to share with you guys the Gamma Edge server. So I can't see if there's any comments or anything. So if anybody does want to jump on the mic, or Void or Delta, just let me know if there's something that somebody wants to or needs to say, or a question they have. Because I only have just a little like preview box of the live room. But this is the Gamma Edge server, right? So this is where we pull our trading view script from. That's the room I'm in right now. But they update these all day. I only update it for you guys in the beginning of the day. It's typically good enough, like if you're on the weekly trading like a weekly contract, or you know, trading something that's not 0 day. Now, if you are trading 0 day and you do have the Gamma Edge subscription, they do update the 0 DTE script multiple times in a day. You can see on the 7th they updated it, you know, before open. And I'm Pacific time, so it says, you know, 5:58, but that's going to be like 8 o'clock for trading time. You know, they updated it again at 6:45 my time. They updated it at 8:51. So you don't see my screen. Is that everybody? Then you guys can see the Gamma Edge.
Yeah, so since the stream was ended earlier, you have to reselect Rustic stream and click watch in Discord.
Yeah, I see 8 people are viewing it, so just re-click on the share screen button in the room, and you should be able to update what I'm showing now. You guys can see this though, or most of you?
Yeah, we're good.
Okay.
Yeah, go ahead.
All right. So this is where the Trading View script is. If you don't use Trading View, they also have Thinkorswim, which is cool. So they have, you know, multiple Trading View scripts. But most importantly, what I want to kind of show you guys beyond, like, they have, you know, access to the Gamma Edge wiki, which is, you know, their whole website that teaches you how to use Gamma Edge, which is really nice. They also run some live rooms. I've never actually participated in any of them, but they have some just different informational stuff on their server. But mostly what I wanted to really point out is these charting sections. And you can see there is a whole list, and I've posted the actual commands that I could pull if anybody, you know, ever does request them or is interested in them. But they have all these commands that we can pull that give us all kinds of data. And, you know, I'm sure if you go through here, you can actually see some of our members pulling commands too at different times. But this is where we get the net stat chart, which the net stat gives us. Yeah, here's our Deltajeans, but Stubby Jeans running some scripts or some commands. But we get the net stat one here, which the net stat's going to give us like the expiring contracts, you know, Delta and Gamma, Charm and Vana, which are, you know, the primary and secondary Greeks. It also will tell us if they are out of the money or in the money, and whether they're puts or calls. And so that can be really useful information. And then we can get like this one that I'm showing here. This is the call put centroid, which can help you understand which direction that the calls and puts are coming in. So sometimes you see, like you can see here, it looks like we're up at 608. This is on SPY, and this is last Friday. We're up at 608, and you can see the calls are actually like closing out and fading down. And you can also see the puts are coming in at lower and lower strikes, right? And so this basically tells us that like call volume is closing out, or the calls are coming in at lower strikes if they're opening, but they're not trending up, right? So this is bearish on the calls. And then you can see also the puts, they're coming in and they're heading down as well, which ultimately shows that you have more put volume coming in at lower strikes. And what you can see on price is that price kind of faded, between that put and that call level. And both of it was fading down the entire time. Now, sometimes you see like the put line going upwards and you see the call going downwards. At some point in time, when price comes down to that apex, it can make a decision, to go up or down. Or you might see both of these lines heading upwards, which is more going to be more bullish, that calls are coming in at higher strikes, right? Puts are closing out, or they are also moving up. And that's going to obviously show price being bullish as well. Now, this is one, again, that Delta uses a lot of. Is there anything that you want to explain specifically on this one? Because I see you run this command a lot.
Well, I'm sorry, I just walked away. What was the question?
Oh, the put call centroid command. Anything you want to note? I basically just said, like, when you see, like on this chart, when you see, the call level pointing down and you see the puts pointing down, it's a bearish look, and that means that calls are closing out, or they're coming in at strikes lower than where the price started for the day. And when the red line's moving down, it's puts opening up at lower and lower strikes, driving price lower, right?
Yeah. So I 100% agree. How I use it is, I would say, let's say market opens at 8:30, around 9:30 to 10 o'clock, you'll see the overall trend, and you'll see the speculation of what's happening. And I'll kind of note the put strike centroid at the very bottom. You'll see like negative 0.097, and the call strike centroid. And then I'll update this about every 5 to 10 minutes and see if we're still transacting the same trend all the way through. And one of the guys that I think Paul, for example, Paul was saying that usually if you run this command probably around 11 or 12 o'clock, we'll continue that trend for the rest of the day. And then going back to ICT again, I strongly trying to find, because we're obviously you're going to go up, down, up, down, up, down. You're going to create, if you're trending down, you're going to create lower highs and lower lows. But finding those lower highs, the best way to do it is try to use, again, those PD arrays, or try to figure out where the 50% value of that swing low to swing high is. And if we've already hit it, if we haven't hit it, that's a low hanging fruit to make a trade off of. But you can probably use all sorts of different charts like Tesla, SPY, QQQ, and try to find the 50% of that swing low to swing high if we're trending downwards, and make a trade off of that.
Right. Yeah. And so, even on here, like, I can see, without even having like an actual candlestick chart pulled up, you can see like after 11 o'clock, that was the what kind of like the rug pull that we got during after the silver bullet. But you can see, like, on the first bounce, there's a fair value gap right there. I mean, I can see it just because we had a aggressive down close candle, right? So we pop back up, there's that fair value gap. You can enter short, and then kind of after the 1300 mark, right, you can just visualize that we trade up into a previous swing high order block, right? Another good opportunity to take a short there, especially when the call put centroid here is suggesting that we're trending down. So we'd be ideally looking for those short entries in our fair value gaps in our order blocks.
Yeah.
Now, what happens when we have crossing?
So anytime we have crossing centroid.
Hold up, Delta, you have some really bad echo. Not sure what changed on your side.
You're saying I have bad echo?
Hey, let me turn my mic off. It might be like my speakers being picked up in my mic, and then let's try it and then talk again and see if it's still echoing, because he's not echoing on my end. Okay.
Go ahead, Delta, say.
All right. Anytime we have crossing centroids, I usually won't make a play off of that, because that could just be speculation that we might just trade sideways. You want to see.
Delta, it's still happening to everybody listening. Rustik, cancel your live preview thing.
Is it better now?
No.
Yeah, I'm sorry, man. I'm on my phone at work, so
Rustik, just stop your streaming. Yeah. Delta dropped. You're echoing, Aquazar. I don't echo. Must be Rustik then.
can you hear me now?
I don't know. He's not echoing on my end. Must
Yeah,
be
he's not echoing now.
must be you, Void.
Nope.
Okay, so it's better now.
Read the chat, boys. Yeah, it's better now.
Okay. So going back to what I was saying, anytime I see the centroids converging or intersecting, I won't make a trade off of that because the whole entire point of using the vol-m command is to identify the trend of the day. And I'll use these step by step. So obviously I'll use the netstat command, I'll use the left-hand plane, and I'll use the left-hand plane to identify, okay, where is it that if we start going low, what level will we hit that could be a strong liquidity level? And just to go for an example, I use the netstat and vol-imp command. I don't broadcast this vol-imp command to you guys because I don't know if y'all guys are even making the same trade or if y'all guys are paying attention to it, because if you're looking at it 10 minutes from now, I'm also don't, you know what I mean? But I'll use a better example. Can y'all guys still hear me?
Yeah, we can hear you.
Oh. Okay. So going back to like my channel over the Stubbies analysis, I'll use significant areas of liquidity. I'll point those out. So obviously I want to know where the expected move is, and the SPX is just a very simple example. I would run the web app command, and then I would look at, okay, I see 6,100 is a huge strike, and have we hit that level before? How important is that level? And if we do hit that level, how are we reacting to it? And then I'll run the vol-m command. So like we talked about earlier, we'll notify those significant delta levels. And as we approach those levels, how are we reacting? And then I'll use, PD arrays, as we talked about, with the vol-m command, with the netstat command, to create a certain bias on a trade, because a lot of traders won't make the trade, and they won't make a trade within the first 10 to 20 minutes of market open. Usually there's better traders out there that can capitalize off those moves, but I try not to unless we hit those liquidity levels.
Perfect. Yeah. I don't really love trades in the beginning of the first 15 minutes anyways, because premium's usually jacked up at open, which then they typically like kill immediately. So you're just getting overcharged for your trade anyways in most cases. Best to let it just settle down unless you're extremely convicted in a certain direction of a trade. I would just wait, especially to see as we approach, because the silver bullet is 10 o'clock in the morning anyway. So that there's likely to be a move during that time period. And oftentimes within that first 15 to 30 minutes is where we see the liquidity get delivered on to set up the silver bullet as well.
Yeah, if we hit those levels that I'm talking about inside of a kill zone, I'll note that as a little bit more of importance, like a plus setup. Like, okay, it's inside of a kill zone. It's a liquidity zone that I marked up. Now I'm looking for a PD array, and then or I might look for a change in structure, or standard deviation. And once I get that, then you can make a trade off of that.
Right, for sure. All right, so that is kind of the vol-m command. That's just one of the commands that we have access to. You guys are welcome to tag us and ask us Again, I highly encourage, if you haven't used the 14-day trial on Gamma Edge, use it, just see if you like it. Full disclosure, I do get referral bonuses for anybody who signs up for Gamma Edge. So I do have motivation to get people to sign up. But to me, Gamma Edge has been a game changer. I think that the two guys in here who are using it can also say that there's a lot of value in what they offer. But you got to understand how to use it, right? Nothing's going to be worth your money if you don't know what you're doing with it. And you don't take the time to learn the data and learn how to, draw the commands and learn how to use the commands. If not, you're just kind of looking at, at numbers and taking guesses. So we're definitely happy. I'm happy anytime to help people understand them. But if it's not something you like as well, we can always pull any of those commands anytime you want. I am happy to do that. Just know that, sometimes I'm not available or at my computer 24/7. And so, having it yourself, like I think, Deltajeans just said, he sometimes will run the volm command, every 5 minutes, to see if things continue to change. So, where I may only update once an hour or once a day, in order to get some of those numbers. And, again, on 0 day, some of these things rapidly change. The next one we're going to kind of look at, and I'm just going to drop an image in the chat too, for those of you who can see it in the chat. But I will also share it on my screen here. This is another one that is the netstat command. This is one that, kind of gives us some of the same information that the web app will give us. But it just kind of, it streamlines some of the most important information, in my opinion. Right. And this is the delta, the charm, the gamma levels. And it basically just gives you like the highest level that's on there. And this is how we took a lot of the QQQ trades last week. I've kind of been observing Deltajeans with this, the way he's been using this as well. And we found that net charm, can be a significant driver of price. And so I can't get a lot of information on what charm actually is when I Google it. But I haven't found that it's incredibly relevant to know exactly what it is. And instead that price is, likely to target one, if not both of those levels throughout the day. Oftentimes we might see price move towards one and then see price move back towards the other one, and then sometimes back again, but like in the example of this one right here, you got the negative 110 million on the out of the money calls at 605 on the RHP side. And then you got the positive 87 million on the out of the money puts at 595. So if we were heading into market open, I would mark both of those levels out on my chart, the 595 and the 605 level. I would also look and say, okay, the bigger number right now is the out of the money calls. And so I would be targeting 605. I'd still be looking for some kind of smart money concepts entry, whether it's a fair value gap, a return to order block, a, optimal trade entry fib level, a market structure shift and a return to a fair value gap, any of those kind of like, 2022 model ICT stuff. I'd be looking for the entry point, and then I'd be looking to target 605. Even if we didn't get quite there, if we're say down around 602, 603, it's still a nice move to target. Oftentimes we'll fall short on the first attempt, and then we'll kind of cycle back and run back and hit it again, is what I've kind of noticed. So if you sit around, sometimes theta can decay your potential gains. So ideally we're just grabbing it, running the first impulsive move, and then trying to get out as close to that strike as possible, or when you start to see the trade break down potentially. This is where sometimes the DVTrendz can come in helpful too. You can either start to see a candle color change that might, show a reversal, or you might see price come back down below one of the trigger levels, or you might see a fair value gap invert, and so then you can get out of the contract. But ultimately, like, I've found that the net charm is a really good target, and we're likely to drive price up, because those are basic. When they're out of the money like that, it basically means that there's a high amount of those positions that have already decayed by the time we get to this expiring day's contract. And so when they've decayed and there's such an important level where all of these contracts are out of the money, right? That's where big money, smart money, have bought all these contracts up, and then they're likely to try to drive price towards it in order to get their profit. And then same thing, like if you got an out of the money call, out of the money put, once we get to that out of the money call level, we can try to play the reversal to see if they drive it right back down and pay out, all of those expiring puts. Now, sometimes you want to differentiate as well. Like we might have it be in the money calls on the LHP side and out of the money calls on the RHP side. And this is something I think we saw on QQQ on Friday. I don't know if it was on SPY, I wasn't tracking it, but on QQQ, we had in the money calls on the LHP side and out of the money calls on the RHP side. We pushed up to, if not all the way to the out of the money calls. And then we dropped down all the way to the in the money calls and actually through that. So that told me there was a lot of in the money calls that were already in profit. They ran up to probably profit on those out of the money calls, and then they dropped to burn the in the money calls because there was a significant amount of them, and then drop price even lower than that. So it can be different, but either way, it gives us a range that we can kind of target on both sides. Now, again, it's a command that you would want to probably update and throughout the day to see if those levels change, because it was like, I think again, it was on Friday that we started to see those ranges significantly change. And if you were still targeting the old levels, you may not be able to see where those new levels have adjusted to.
Yeah. Just for how I use the net stat on that. So we have on the left-hand side, the left-hand plane is going to always be everything below us, and the right-hand plane is just going to be everything above us. So I can see here that we have 592, we have in the money calls. That's not significant at all. I wouldn't even mark that as like a significant liquidity level or anything like that.
Would you say under a million? Under a million is just kind of worthless or insignificant?
Yeah, I would agree. Anything under $1 million is not really significant. Once we start pushing like 800,000 or something like that, I would start to note that a little bit more or value that a little bit more. But anything above 500K, definitely nothing to really react off of. So, so what I'm looking at here is I'll see net delta on 592. Obviously, calls have a positive delta value, and then puts have a negative delta value. So if we have in the money calls at 319, nothing to really react of, and that's really not going to hold us. I use the left-hand plane in a call dominant environment as support, right? So I can note that if we look at the SPY right now on the web app, we don't need to go there right now, but if we did, we would note that all these levels, the whole entire environment is put dominant, and we can see that 605 is over us. Like I said earlier, everything on the right-hand plane is out of the money. And sorry, it's not out of the money. I said that wrong. Everything on the right-hand plane is above spot price, right? So if it's above spot price, if we have puts above us, those are in the money. Well, what happens to puts whenever they're in the money? They increase to their full intrinsic value, right? But for example, if we have everything below spot price for puts would be out of the money, but everything below spot price for calls is in the money. So calls increase to their full intrinsic value whenever they are in the money. Puts, for example, that are below us, they are out of the money, but the longer that they stay out of the money, that's whenever TARM takes effect, right? So what happens here is we have the second order Greek, and delta increases in its value the closer spot price moves towards it. So if, for example, let's say tomorrow we gap down to, not gap down, but as soon as, let's say tomorrow market opens, and then before pre-market opens, we're at 596 or 597. All those out of the money puts are not decaying as fast as those out of the money calls. So the next significant price that's being affected by charm is 605. So all the charm column does is it notes the significant price or significant spot that's been affected by charm itself. And that's how it usually pulls all that information together. Is okay, where where is the most amount of like deltas valued at? We have a significant amount at 595, 605. Well, if there's so much there, what's happening to those calls? Well, they're decaying, and we're able to see the value of that decay or the effect of it. We're able to see the effect of that decay on the net stat command in that column. And essentially, whenever we have that much decay in our right hand plane, that creates a headwind for us to move upwards. Like I said, unless there's some sort of catalyst or news event or some sort of market news, because a lot of these news events are just smoke screens for volatility. Um, so all I can gather from this information is these out of the money puts and out of the money calls will decay at the same rate, like for cer- like for the time that's going by that's elapsed. That's why I would use the volume command. I would say like, okay, these chopsticks aren't rising and they aren't lowering; they're just moving sideways. Okay, now I know charm is going to take effect. Well, which column has the most effect in charm? Oh, the 605 price. There's a lot of decay right there. I can expect that before we move up, we would have like an easier time coming down to 595. So I would look for that target of 595 if we were just trading sideways, like there was no speculation, and we can kind of see the speculation of the volume of transactions. And the hardest part about the volume command is you have to look at both pictures. You can't just look at the one chopstick one we have. There's two pictures that come up whenever you run that command. The other one will show you the spikes in the red and green lines. Yes, that's exactly what I'm talking about. So there's we don't have the chopsticks here. This is the second picture that populates when you run this command.
I put them in
And
the
what
chat
this
too.
tells, yeah. So for the bottom one, for example, the one on the volume trend, I'll say like, okay, what's happening here? We see large spikes in the red line. I would easily say, okay, we have a lot of puts being put on the table from noting from price declining, and then we have those red lines spiking. So somewhere there's a whole bunch of orders being put in. Of that how I look at the charm and stuff like that, and I don't really pay attention. I mean, you can gamma and then Vana. Vana is just volatility, and I haven't really dialed in volatility that much. I think that gamma, charm, and delta are really the Greeks that really matter in terms of how we use NetStat. So, like I said, charm is only going to take effect if spot price is not moving, and then we just want to see which one's decaying faster or which one has the most decay on it based off of how price is moving.
Nice. Thank you for that explanation. Yeah, I've found. I mean, I found last week just specifically using charm as like a kind of a boundary and target as we opened price. You know, gave us it gave me a good understanding of like where to kind of target and then what contract would take, because sometimes you know, it's like what's the right contract to take? Do you take, at the money? Do you take out of the money? If you take out of the money, how far out of the money do you go? And what I found too is that Charm can give you a nice option of taking the out of the money contract that matches the Charm one, the Charm level. Whether you're going, the left-hand plane and going, for the below spot because you think price is going down, or you take the right-hand plane above spot because you think it's going up. But if you select that contract, it's going to be out of the money, so it's going to be cheaper, and it's already decayed, and then they're going to try to push price towards it, and so it kind of prevents too from like grabbing contracts that are too far out of the money that are unlikely to end up paying out. So there's a whole lot of other commands, but for the nature of time, I am just going to move kind of on to the DVTrendz indicator for a minute. And then if there's any additional questions, like I said, drop them in the chat, or later on after this session, if there's any additional questions, you can DM me or put it into one of the, premium or free chat sections, and I'm happy to answer more questions if there are any, or anybody wants to have conversations about them. So let me stop sharing this screen here. And I'm going to pull up a chart real quick with just one last thing on the Gamma Edge stuff, just because I have it up here. But here's that trading view script, right? And so it gives you that positive and negative transition zone that we saw on, I don't know where the negative trends is. I don't see it here, but basically it gives you that zone that you saw on the app, on the app where, we said it was kind of like the chop zone, if you will. It gives you 0 gamma level. It gives you where your out of the money calls, out of the money puts go in the money. And so that's what the trading view script looked like. And that updates again constantly throughout the day. But to add that, first you got to start an indicator, and then to update it, for those of you who don't know, right here, there's a little source code brackets on your indicator. You actually have to open that up, and then you actually have to delete the previous code, and you have to copy the new code in, and then hit update on chart, and then it will be the newest, most up-to-date information. So now I'm going to just take a quick look at the DVTrendz and just kind of show you guys a little bit of how you might use that. So we have all the alert bots running. I'm still adjusting those as we go, just to see if there's some that work better, some that work worse. I don't suggest entering just straight off an alert. What I like to say about the DVTrendz alerts is that when an alert goes off and it notifies you, that's just a good time to be able to go take a look at that chart and then see again if there's like a smart money concepts entry point that we can identify. We're not staring at every chart all the time, and so those alert bots basically are a good way to say, hey, something's going on over on this ticker. You might want to just take a look at it, and then we can make an educated decision on whether or not there's an entry point there, or what we might want to target. Serious Rose, what's the indicator? The DVTrendz one, or are you talking about the Gamma Edge one? For the script. Oh yeah. You just let me think how you start a new one. I think I just opened up a Pine editor the first time I did it. I think I just opened up Pine editor down here and pasted the script in, and then you just change the name to whatever you want. Or you can take like an open script and just delete it, put the new script in, change the name and save it. And so there's I think a couple different ways. It's not one that you can search for because it's its own. You're basically creating a script out of thin air on TradingView and then pasting in the Gamma Edge script. And again, you can get the script, like I post the script daily for us if you don't have Gamma Edge. So if we take a look at the DVTrendz indicator, and I share my my settings. My settings are similar to the developer settings. Their Discord is free to join, whether you have the DVTrendz indicator or not. And so sometimes if you have questions about it or whatever, you can hop into their server, or you want to sit in their live rooms, which they do for free. You can watch how they use their the indicator as well. They're pretty cool guys, Caleb and Rect. But I got their settings, and then I just adjusted them slightly to my liking. But I have the white line here is a 3-minute trigger. We got a blue line 15-minute trigger. Yellow line is 1 hour trigger. Red line, wherever it is, there it is. This is the red line. That's a daily trigger. Pink line is a weekly trigger. Right, so our daily and weekly are going to be like our high time frame, triggers, or they're some kind of moving average that stays static on every chart. So it's probably some kind of daily moving average that if we went to the daily chart, and threw on like a SMA or an EMA, it's probably something like that. But it shows up now when we drop to the 3-minute chart, where most moving average indicators, they're a period, so a 200 period or a 50 period, which is like amount of candles. So if you drop to the 3-minute chart, it adjusts to 200 candles on a 3-minute chart instead of 200 candles on a daily chart, right? So the nice thing about the DVTrendz is that they stay static on every chart. So no matter what, this 3-minute or this daily trigger is going to look the same on every different time frame we go to. So typically I'll use like the 3-minute chart for trades. And ideally, like, we'll identify a trend and we'll be looking for a reversal. And it doesn't always have to be in the direction of the higher time frame bias, but we're just looking for, crosses over the 3-minute, which is a short-term trend, and looking to see if there's some kind of entry point. So let's just say on QQQ here on the 3-minute chart, right? We were trending up. The ribbon is white, which is bullish trend. And we see price drop down through the 3-minute trigger. This is a more aggressive situation because we had that, rug pull going into the silver bullet, but we get this big candle that drops down through the 1 or through the 3, the 15 and the 1 hour. Okay. And then we see price pop back up. And if we're looking for a smart money concepts entry to kind of, go in line with our DVTrendz, then we have a bearish 3-minute fair value gap. And so we could be looking to see if price trades back up into that fair value gap. It didn't get there in this case. And so, whether you took an entry or not, there wasn't necessarily a smart money concepts entry until you get back down to this fair value gap. And then there's a trade entry in that one, right? Minimum target would be down at this previous low, or there was probably that we could confirm like a charm level or a gamma level or something that we could have targeted down here as well. Or we have the daily DVTrendz level that we can also target. So we can use those trend levels as targets, in some cases as well, but this is going to give us the first indication just using this trender that we're seeing, either price reversing trend or continuing trend, depending on what it's telling us. So when we broke through again that 3-minute and that 15-minute, that's telling us the short-term trend has changed, right? And then we see that cross. So now we got 3-minute below 15-minute, right? So first indication when we drop below, that means that there's potential shift coming, right? The candles have changed red. Now we see the cross of the 3 and 5. That means trend has shift. Price is below the 1 hour, right, trend. So now our higher time frames are confirming that, higher time frame trend is shifting as well, right? The 1 hour was trending up, then you see it roll over and start to trend down. So at that point in time, you can also try to start riding the trend in that direction, right? Below the 15-minute is kind of our medium time frame. And so even when price pops back up, right, we're still below the 15-minute. You can see price tries to kind of test that 15-minute. It's a fair value gap also. A lot of times these will be in confluence with each other. And then you can just kind of, again, ride that trend to market close, or, just into some sort of profit, depending on where your entries are. We can look at another example too on like Meta. And it's kind of up to you on the time frame that you like to trade. Again, I like to trade the 3-minute time frame. Let me just remove some drawings here. So here's Meta. Out of the gate, we get this this move up, right? And then now we fall back down below the 3-minute, and then we test the 15-minute. So any of those can be potential, points where we find support, and then again, ultimately, just once we've identified, the direction of the trend, we can try to ride the trend. And it may not be perfect. So again, I don't just grab price the second it gets to any one of these, trigger levels. It just gives me an idea of, if price is above or below, and then which direction the actual trigger level is pointing or trending, right? So when Meta comes back down below this 15-minute trigger, and we're still above the 1 hour trigger, right? And the trigger levels are still, trending in a bullish direction, then I'm going to look for some kind of smart money concept entry to potentially grab. Right. So what I can see here as it's, developing is you get this bottom, right? We get a price that returns and sets a higher high. We also have a bullish fair value gap right there. And you can take that entry, right? And then at that point in time, it looks like price never closes really below that fair value gap or below these order blocks, right? And then we're above the 15-minute and the 3-minute trigger, and then you can ride that trend back up towards some kind of liquidity target, right? And where are those liquidity targets? A return to a fair value gap, a previous fair value gap, okay, which you can see we hit. The other option would be highest up closed candle order block, which we didn't quite hit, right? But those are two potential targets right there, right? Low hanging fruit would be return to a previous high, which you can see we also hit, right? And on Meta, a move from 314 up to 319 up to 321, right? Potentially up to 723, 721, 719, but you're grabbing 713, 714. And so still a nice move, even on the low hanging fruit trade on Meta. So not using any single, tool that we have, to take entry, but just using them as, gauges on when it's important to watch, right? Because we get a lot of sideways price action too that is just garbage, and we're not taking trades based on that. But when we're hitting those triggers or we're hitting those different things, we start to pay attention, and then we start to look at the information that price is telling us and start to develop, where our potential entries, where our potential exits are going to be, where our targets are for either price to come down and take liquidity or price to deliver to liquidity. And then, ultimately, smart money concept still ends up being the primary source of confirmation and entry points, right? Just using some of these other tools in confluence with smart money concepts to help kind of solidify our bias towards the position, and give us more confidence that the trade is the correct in the correct direction. Any questions on any of this stuff that we've just gone over? I know it's kind of a lot of stuff and some new stuff. Okay, so if there's no questions, I'll let you guys go. Thanks for tuning in. And again, if there's anything that comes up, today or throughout the week that you want further explanation on, let me know. I will try to post the Gamma Edge command, the different commands options into the Discord somewhere. It is somewhere in there, but I can't remember where it is right now. So I will try to post those commands again. Maybe with some examples so that if you guys do want to pull commands, you can let me know. Again, I highly encourage you to at least try the 14-day trial out on Gamma Edge. It's completely free. A little trick to that is that you literally can sign up for it and set it to cancel immediately so that you never actually get charged when that 14-day trial does end, but then you still have access to the Gamma Edge for those 14 days. And then if you decide you like it, continue with it, but at least try it out, because there's a lot of really cool stuff in there. And I think it will help you guys develop as traders if you do understand how to use those tools. Raymond, what are your time frames on this chart? This chart's 3-minute time frame or 3-minute candles, and I shrink it and expand it just depending on what I'm trying to see, but you can also see I have the indicator on with the gray boxes that have my different time macros. So pre-market, silver bullet, lunch macro, PM macro are those gray boxes. You can barely see the London macro because it was kind of tiny back here, but you got the London macro as well. So those are the different time frames that I pay attention to specifically, but this is a 3-minute chart. You can trade the 1-minute chart. The 1-minute chart I find has a lot more chop. I don't know if it does with meta, but it chops a lot more over the trigger levels. But the 1-minute chart's also going to be your earliest potential entry with fair value gaps. So, I do think the 1-minute chart's good. I just like the 3-minute as far as the trigger goes, because I think we get less fake out candle closes above and below the short time frame triggers. Because what you'll see, because I have the 1-minute chart up now, if you're viewing it, what you see is that we, like say here, we pop over the 3-minute trigger and then we consolidate on the 3-minute trigger, which in this case you might say, oh, we're above the 3-minute trigger, we're above the 3 and the 15. So now price is going to drive back up. And then what happens here, we consolidate on it and then drop down through it. So where the 3-minute chart may not show any actual candle closes above that 3-minute trigger, the 1-minute does. So I just for the examples here specifically, I like the 3 or the 5-minute charts when you're trading just the DVT triggers or just looking at those specifically. But certainly when you're using smart money concepts as well in Confluence, I suggest dropping down all the way into the 1 sometimes for those fair value gaps or those return to order blocks. All right, guys, well, enjoy the rest of your Sunday. We'll see you guys in the Discord tomorrow. Again, any questions, let me know. You can send DMs or post in the premium section or the free section or whatever. And go Eagles.